Eric Muadit, Muadit.com, with world market analysis for the weekend of September 3rd and September 4th, 2016. Let's take a look at how Asian's market closed, and we can see pretty much, let's say, slightly unchanged. Australia was down, Singapore was down. We see that the Nikkei was unchanged, and China and Hong Kong slightly to the upside. Take a look at Europeans market on Friday. Nice session. Let's call it 1 to 2% gain on the major averages in Europe. With about an hour to go before the close of Friday, we can see Brazil is up 2% and Canadian market is up 0.76. And the US market, again, 1 hour to go before the close of Friday session, and we are seeing a relatively small gain for the day. Markets up about 0.3% before the close of Friday. Let's take a look at those charts. We begin with the Australia weekly chart, and before I go on here, the one takeaway from most of these world market charts, the biggest takeaway is these are not easy markets to kill. In other words, yes, you might see some short-term resistance levels and all that, but generally speaking, world markets seem to be very resilient. We haven't seen any major sell signals. These markets are proving to be very stubborn, and anybody who wants to play the upside in markets will have a lot of reason to do so. So bulls, I think, at the end of the day, have control of the current market direction. So here we see that we've been watching the Australian market, which for all intents and purposes here has been showing resistance, going back to the break on the weekly here on the RSI. Ever since that RSI broke down, the market came off the highs in 2015, and here we are seeing that in 2016 on the weekly, the market came, and this level here that was break also was resistance here for short-term highs, has again become resistance area, and the market is pulling back. And so that makes sense that this pullback is taking place because of resistance on this line. We were also unable to break out on the weekly. If you take a look at the monthly, one thing you'll see on the Australian market, it's probably one of the markets that seems to be giving a major sell signal, or at least a sell signal on the monthly. Take the highs on the monthly RSI going back to 2007. You see that we hit that level about 2 months ago, and we've been pulling back since then, and also a back test of this recent break line. So this was break in 2015 here off the highs there, and we are coming back and showing back test failure. So the Australian market on the weeklies and monthlies doesn't look very strong. But having said that, on the daily, again, these are not easy markets to kill. We see that the daily is coming back to a level where it has shown support before, coming back to this RSI lows line, and should find support around here if it is to be consistent with other markets, and also coming back to test this off the lows here. This was where the RSI movement began. So that movement, we can use that information to draw the line where we can see support. So the market is coming back here to test those two lines. If they hold, then here's another market showing resilience, and maybe might be setting up to recover after a pullback of recent highs. If we take a look at China on the weekly, we've been talking about resistance coming from this backtest line here on the weekly RSI. So ever since we broke below that level, which was this break here off the highs there, the market has been coming back to this backtest level and showing resistance for short-term highs. And over the last couple of tries, we failed here for the short-term highs there, and we failed again here. So clearly we can see, as far as the Chinese market is concerned, it does need to move above that line of resistance, and also would like to see that the recent weekly highs are broken. In other words, the market clears that recent weekly close. The level to watch there is for a breakout on the weekly above 3108.10, which is the recent weekly closing high for 2016. Anything above that would be bullish, and also moving above the blue line, which is the backtest line any movement above RSI resistance and price resistance on a weekly basis might be a good signal to play the market for a move higher. If you take a look at the Chinese market, the Nikkei is back to resistance on the daily. As you can see, topside resistance coming into question right now. If the market is to see levels beyond this, it needs to move above this line of resistance. Otherwise, failure to move above that blue line might suggest that the next swing trade is lower. If you take a look at the Indian market by way of the Nifty, you can see that this past week there was a strong breakout on the weekly above the recent weekly closing high of 8683. And as long as the market is holding above that previous weekly closing high, going back to this week here, as long as the market is above that level, you have to give the market the benefit of the doubt. Also keep in mind, we'd like to see the market hold above RSI 69.1 if this is to continue moving higher. The last thing you want to see is rejection here on the weekly chart. If the market fails to hold above 69.1 and shows a reversal, that's going to be a double top on that level, which might not be a good setup. So you'd like continuation of this breakout and also for the market to hold above 69.1 for those who are bullish. It looks like more than likely on the monthly for the Nifty, the next target is to break out above 2015's monthly closing high. So we are very close to that. It would make sense if the market was to take out that previous monthly closing high of 8844.60. Again, the closing high of February 2015. Anything above that would be bullish. Now, the one thing I can say here is we have to be very mindful of the fact that if the market was to turn negative here, if a down month, a negative month here, might actually be setting up for some type of a reversal. And I've talked about this in other videos, because a negative month would basically confirm that the market is coming back to a level where it has previously stalled and led to major drops. So turning negative for the month would confirm RSI highs here. That's not a good sign, because every time we've dropped below that level, markets have seen a big drop. Resistance here for the highs here in 2011, 2010, a break there off the highs of 2008, and all this have been serious reasons for the market to pull back. Resistance here also for this level. Keep in mind, so what I'm saying here is if the market turns red for the month, that might not be a good setup. What the bulls want to see here is for the market to break out above 8844.60. On the daily for the Nifty, we also see here that we had an improvement in price, but the RSI is not really showing any improvement. So this negative divergence could be a problem. And to make matters worse, on the hourly, we can see that the RSI made a slight, or the price made a slight high, but the RSI did not follow through. That negative divergence could be a problem in this market. So that negative divergence, markets making an improvement in price, but the RSI failing to do so, could be setting up for a pullback. If you take a look at the FTSE, we can see now we are coming very close to breaking out above the recent 2016 weekly closing high. So the level to watch here is any movement above 6916.02. Any breakout above this closing high on a weekly basis, any breakout above that would be bullish. Also, you'd like the market to hold above 69.1 if it is to see an acceleration in momentum. Keep in mind, if you take a look at the monthly chart, you can see that we are getting very close to moving to 3-year highs on the RSI, which would be bullish. So RSI getting very close to 3-year highs. And also keep in mind that one of the MACDs is already trading at 3-year highs. So we can see here that we meet the minimum requirements for a quality breakout. What the market needs to do is break out on the weekly above that recent weekly closing high. And again, take a look at the weekly, and it just needs to break out here above that recent weekly closing high of 6916. Whoops. So 6916.02. That would be the breakout level, confirming that maybe now the monthly charts are giving a major buy signal take a look at the daily. The daily did show a potential for a bounce, given that the movement on a day-to-day basis recently came back to test this line. We see we held here. We had a move to the upside on Friday, about 2%, because the RSI jumped above 50 on the daily, which is an indication of what happens when markets move above or below 50. So good support on the RSI on the daily. Now that we've had a nice move on an hour-to-hour basis, we might start the week with a little bit of resistance here. As you can see, the top side of the hourly chart is going to be tested right now, and if we cannot move above this short term, it might suggest that the next short term move here on an hour-to-hour, maybe day-to-day, is going to be for resistance on this level and a pullback as we begin the new week. Now, the same can be said for other markets in the European markets. For example, the French CAC had similar looking charts in terms similar to that of the FTSE, and so does the German DAX. So I'll skip those just because they look similar. In other words, the markets look decent. Hour to hour they might pull back, but week to week and month to month they look very stable. If we take a look at the Canadian market, here we are seeing that it is doing its best to break out above the recent weekly closing high at 14,747.45. So as long as it's holding above that, that's a good breakout. You'd like to see the RSI capture the level above 69.1. And to be consistent with other markets, we can see that there's a reason why we can expect hour to hour for there to be a pullback, because if you go to the hourly chart, we are coming back to test the recent break. And this recent break goes to this RSI break off the highs here. And so we draw a line from there, and this is what is being tested. As of right now, we see that the market has hit that level and is showing resistance. So hour to hour looks like markets are going to have to pull back after a recent recovery of the lows of early this week. Even though ultimately it looks like we might actually be making a move to fresh highs based on the fact that we see double bottom support back above 50. So you get double bottom support on the 50 RSI level, suggesting that more than likely day to day we might actually have to take out the recent intraday highs. Keep in mind that double bottom support here, that double bottom support is consistent with daily RSI support line going back to the lows of August here. So you draw a line like that, something like that, and you can see that we've hit that line and we are bouncing off it. So day to day markets continue to be okay. Yes, hour to hour might pull back, but ultimately, like I said at the beginning of the video, these markets are very resilient, and don't be too surprised if you see them inching even much higher. This is not the only market, as we've seen, showing daily support, which daily chart looks good. You can take a look at the EWZ, the ETF that tracks the Brazilian market, coming back recently to test this RSI lows line. It held. It also happened to bounce back above RSI 50. So lots of reasons here to imagine, or at least to visualize, the fact that the market could be setting up to test recent highs, maybe even go through them. So because of this support around RSI 50 and support on this trend line, we have to assume that market here is confirming that it continues to be very stable. Even though hour to hour, again, another market showing that hour to hour, maybe we've come back to a level where the market are going to have to take a little bit of an hour to hour pause before they continue with their movement higher. So generally speaking, most markets worldwide look like they're still with strong upward momentum, with hints of a slight pullback hour to hour. Of course, we shall see. And again, the worst thing that can happen to markets here is if they turn negative for the month. If monthly RSIs and monthly price action is negative, then some of the bigger time scale charts are suggesting that if and when the markets turn negative for the month, we might be looking for a serious type of a correction. Eric Muather with Muather.com. As always, good luck, peace, and blessings.